Hello dear traders, the new trading week has kicked off, but so little has changed. Having started the year with a fall, the main US stock indices remain flat. Despite expectations of moderate growth, they practically did not move at all. What's the reason for that? What are the main prospects for the stock market? Watch our video review and find out. So let's start with the Dow Jones. Instead of an increase, the index has been shedding losses for the second week in a row. However, they were not so big, totaling 0.5% compared to the last week's decline of 1.5%. On Monday, the Dow was fluctuating around 35,900 level, losing 180 points. As for the expectations, they remain quite modest. Inflation in the US hit the highest level since 1982, reaching the target level of 7%. It increases the likelihood of monetary policy tightening by the Fed. Expectations of the key rate hike will continue to weigh on the stock market, at least until the FOMC meeting, scheduled for the next week. The Dow is unlikely to rise higher than 36,500. It may also dip to the low of 35,500. The S&P 500 index ended the week at the same level of 4,660 points. Apart from mounting concerns about monetary policy tightening, the earnings season is about to start. It also drags the index down. Earnings reports and forecasts for the year are still being published, fueling the volatility of the index. The preliminary results are mixed. Given these factors, the index is unlikely to extend losses this week. It may either climb to 4,600 or a bit higher to 4,750. The heavy tech NASDAQ index also remained almost unchanged last week. It has been falling since the end of 2021. Last week it maintained its downward movement, however it shed only 0.1%. As a result, the index sank by 20 points, closing at a high of 14,890. January of 2022 has already been called the worst month for IT stocks in the last few years. In the future, analysts forecast even more moderate growth of the index. This week, NASDAQ Composite is likely to fluctuate between 14,500 and 15,250. The equity market is still in the correctional phase. Investors are trying to keep the indices at their highs. Will they succeed? Let's analyze the current situation. The US economy remains strong even though several important economic indicators have declined. At the same time, some indicators, on the contrary, recovered. Despite the slowdown in GDP growth in recent months, the labor market is improving. Wages are growing. There is a shortage of staff. In addition, demand in the real estate market is also growing, which signals the end of stagnation. Nevertheless, the stock market is very overheated. In addition, inflation has soared to the highest level in 4 decades. It may force the Fed to hike the rate hike earlier than planned. The tightening of monetary policy will inevitably affect the equity market. Even its expectations are pushing stocks down. So this week, the stock market is likely to continue its corrective movement. Investors should also be ready for a possible sell-off. So this is the main forecast for this week. Time will show whether investors will continue to get rid of risky assets and try to keep stocks at their highs. Please leave your comments down below. Watch our video reviews and stay up to date with the latest market news. Have a profitable week and see you back soon.